Hello, welcome to my channel. It's been a while, and trust me. So this time we are bringing in new updates. Okay, so once again, I welcome everyone to my channel. If you are new here, my name is Jason Unveno. Uh, on this channel, our major focus is to simplify finance, and also we talk more about business strategy and as well growth system for professionals and entrepreneurs. So majorly this is what we focus on in this channel. And today we'll be looking at very important and powerful series, business strategy for small scale business, part one. So this is what we'll be looking at for today, and we'll more we pay more attention and focus more on the, because I said it's part one, there are a lot of things to begin to uh, train ourselves on as a small scale business. Okay, so the subtopic under this we'll be looking at the from improper record to business success. So it's something that we need to address, because why many businesses struggle, and how proper structure and record keeping can completely transform your performance. So this training is not just about theory, not just about if you are seeing any figures here or anything. It's not just about theory. It's a practical strategy that you can apply immediately. So once again, I welcome you to my channel. Let's get into business. Okay, so as we all know, before I go further, I'm looking at why most small scale business struggle. And we're talking about this small scale, that is small and medium enterprise. And maybe a medium size with two staff, three staff, maybe starting a startup, and it can be limited, it can be business name, depend on the capacity and as well. So this small scale, according to research, small scales and medium enterprise are the backbone of any growing economy. Check, because they create jobs, they provide goods and services, so they drive local development in every areas. So yet this problem, yet a very large number of small scale fail within the first 3 to 5 years, according to research. Check, because many of them they will start with huge capital, but because of what we want to discuss today, they lack progress. There's no continuity. So not because the business idea were bad, but because of poor management, especially poor financial management and record keeping. So this is majorly what we need to. So this training will guide us, for us to understand some common mistakes that SME, small and medium enterprise, make. So, and also there will be a practical way as well. So I said something about research. There are a lot of research which I don't want us to take much time, but there are a lot of things to learn. So every single problems can be solved if, and that is why we are bringing in this training to us, for us to learn and also share our practice, the strategic actions that we will share during the course of this training. So the first one, the problem many small scale business face. As I said, before we talk about solution or anything, we need to understand the problem first. What are the problem? Why are we coming up with this? So the problem, many business owner can say things like, "Oh, I know where every naira goes. I keep all my money in my head." The truth is, The human memory is unreliable when it comes to tracking businesses transactions. They are unreliable. So you cannot just grow what you don't measure. That is it. You can't you cannot grow what you don't measure. So it's at the point of your measurement, you not decide, oh, this is where I need to work on, this is where I need to work on. So and I was saying that we need to understand that. So the major problem they face is no proper record keeping. You go to a lot of, many of them, they have a lot of sales, a lot of expenses, stock, lots, but ability and lack of proper tracking, money that comes in, go out without documentation. So those things will not allow or will not make the business to to have uh, to continue in the future, because when you don't have that trend, that record of your expenses, sales, so before you know, you have mixed up your money with the company money, and at the end of the day, that's where liquidation comes to play. Liquidation. So no proper record keeping. It's very so because business record are business record. Let me just explain that to us for better understanding. So a business record written or digital document that capture every transaction, like movement of goods, as I said about the your stock, money received, money spent in your business. So these are the story of business in numbers. Records it include your receipt, the proof of every sales you made. How you do that? Purchase invoices, proof of every item, service you bought. I'm just trying to read those expenses log, daily, weekly list of all costs incurred. Stock, we have bank statement, money in on your bank, salary and everything. So the important thing is that we need to track those things. We need to ensure that, so because what happen with if you don't keep this, so the consequence of not keeping records are not serious, and it can destroy business slowly, sometimes without you even noticing. So without record, the reality is that you cannot tell if your business is profitable. That is it. But with record, you know your exact profit at any time. You make so, and without record, you make decision based on guessing. You'll be guessing. So with your record, you make decision based on real data. So and that is what will really help every businessman. So you cannot just, and without proper record, you cannot get a loan. No bank will trust you when you don't have any record keeping. That authority can penalize you because any amount they give you is what you will pay. So I'm trying to explain uh the record keeping purpose, why we need to, because if you overspend without, if you don't have those things, you will overspend without knowing. Okay, let me just give an example. Mama A, I'm just trying to do so. Mama A runs a provision store in Lagos. So she said daily, but never write anything down. At the end of the month, she has very little money despite being busy all week. She cannot even explain where the money went to. Later, she discovered that her shop assistant was stealing small amount every day, but she had no record to prove it. So, if she has kept a daily sales record, she would have caught this even in a week. So, many SME owners see record keeping as big, as for big companies. No, maybe there is too complicated. No, you can see I'm taking my time to ensure that I explain this very well because it's very common in SME, a small scale business. So it is too, they will say that it is too complicated. So this is a dangerous mindset for any business owner. For you to be saying that record keeping is too big, is for a big company, people. No, Record keeping does not need to be complex. All what you need is just to be consistent in it. A notebook or and a pen can be used every day. So it's better than fancy software. So use once in a month. So when you don't start small, you have to start start small, because the caution you don't start with, if you have a software, you might not you will be wasting money on it. So we are trying to explain this to all small scale business owner to ensure that they align themselves with all details. So also the second thing here, you can see I have my time to discuss more on the record keeping. Well, it's about no clear business plan, running day to day without direction, no goal, no strategy. So it's very key to have a strategy, to have a plan about your business, what you need to do, how you want to do it. These are things that really help the business to grow. You have to, you know, you have to have a particular guide that push you, that push the business, and also poor cash flow management. Business makes it, but money is always missing. As I said other time. So owner cannot tell if the property is what is profitable. So these are the major key problem faced by it. So why record are the foundations? Why record are the foundation? In my first slide, I've explained a lot about record. Just think about it like a building a house. You cannot build a wall without a foundation. So record are the foundation of your of business. Without them, everything can collapse. So this training will be encouraging us to build, from improper records. Build a record that can sustain your business even though for 3 months. So what are you going to record? What are you going to record? What do we need to record? Your daily sales record, what you sold and how for how much. Have a log. So stock inventory log. What goods you have in your store? Expenses, every cost, rent, wages, supplies, bank and cash record, money in and money out. So in this simple notebook, you can start building the foundation for your business. Don't mind, maybe it's online business. Don't mind if it's just a small shop. When you start with this today, it will bring a clarity to your business. Okay, so and we also need to understand that why keeping records, you need to know why keeping records. You need to know what exactly is about the records. What exactly, because the record we are keeping is about numbers. It's about the numbers. It's about what you want to uh, understanding your numbers. So once you start keeping those records, you need to understand what the numbers mean. Many business owners have record, but they don't know how to read or understand them. So this section now we explain the most important financial concept in simple and little language that we can see how I put it for non-finance uh, entrepreneurs, so that we can also understand clearly. So number one, revenue. So revenue is just the total amount of money your business receive from selling goods and services. It is all money that comes in before you subtract any cost. So before you subtract all your costs, your tea fare or your transportation or your cost you incur to get the product, the money that came in first is your revenue. Money coming in. So to total sale, every sale you make add to this revenue. If you make maybe 10 million naira today, 5 million naira to like that. So all those money that comes, they are not profit yet. Okay, let's assume that in January, your shop sold goods worth 500,000 naira in total. So that to 500,000 naira is your revenue. It does not mean you made 500,000 profit. You still need to subtract your cost. That's the revenue. That's your revenue. So your expenses, and also there are the expenses here, there are two parts which I will explain. They are what we call cost of goods sold. So this is what you pay to buy that product, or what you use to produce the item you sold. If you are selling provision, your cost of goods is the amount you pay to buy those provision from the wholesale. Okay, I'll use example again. You bought goods worth 300,000 naira during January to stock your shop, and that 300 thousand is your cost of goods sold for the goods you actually sold for that month. Hope we are getting it. So other expenses comes in, operating expenses, all the overhead comes in. So and then there maybe in a part two I will tell us how to understand the numbers in with a proper accounting structure that you need. So the operating expenses, money that going, money going out, your rent, wages. So these are regular costs of running your business that are not directly to tie to your product, because you have salary, so rent, electricity, like that. So uh, your profit, what you actually keep, your revenue minus the expenses. So this tells you if your business is working. That's just the key, if it's working or not. So the profit, net profit is what you actually keep after paying all your costs. So no matter whether maybe the business is working or not. So that is major thing about that. Major aspect about the understanding numbers, which I believe we also. So um now, when after you have those numbers, you understand those numbers, because you can't make a smart clear business goal without having a number that will give you directions. So smart framework. So you set a clear business goal. So we are setting a clear business goals now. And what we need to do is, so smart is just a simple tools for setting goals that are clear and achievable. So you can see X, we have M, we have R, A, we have R at. So smart, measurable, achievable, relevant, and what time bound. So your specification here is that I want to increase my sales by 200 naira per month. Now you know that without your record, you can't get to have this mindset, because those record that you have, maybe in January you have 500,000. So because of those clarity of your numbers and your record, you cannot decide that I want to increase my sales from that 300,000 now by what, by 200,000 naira per month. So be clear and be precise, because you can't just say that I want to increase my sales. No, it won't drive, it won't move you, it won't give you that passion to to continue to be pursuing. So not I want to grow my business, no, but I want to increase monthly sales from so amount. So with that, it puts you to actions. So measurable. So you must be able to track progress with numbers. I want customer, I want more customer. No, maybe let's, for example, now I want more customer. It's not measurable. Okay, I want 20 new customer per month. That is measurable, because if you are unable to meet up with those number, we know, okay, maybe out of 20 you pay 10. But if you just say I want more customer, it's not measurable. Track your sales weekly in your record book. So achievable, set goals that stretch you but are realistic. You can see. So tell yourself, but be realistic. If you currently make 100,000 per month, targeting 1 million naira next month, it's not achievable. It's not. You have to set it to a goals. So you currently make 1,000 and be that, so you're not targeting 1 million naira per month. So you can see it's not. So we need to also be relevant. Your goal must not connect to your business growth. Like, your goal must what, connect to your business growth. Not I want to buy a new car, but I want to buy a deliverable motor vehicle to serve more customer. So goal must relate to growing your actual business. I want to buy a delivery motor vehicle to serve. You can see, so it's very relevant to your business, very relevant. So every goal need deadline. Without a deadline, goals are just which is by the, for example, by the end of March or within 3 months, are we able to what close so thing. Set a deadline. By the end of this quarter, I will do this. I will increase my sales to 10,000 pounds. Those are the things that will give us clarity, and we are good to go. So managing cash flow. You know, the timing of the money coming in versus the going out. So cash flow, that's cash flow. How the money comes in and money goes out. So you know, cash flow is the lifeblood of any business. You can have you can have a profitable business on paper and still collapse because of poor cash flow, because that is where the real life is. So it's not um it's dangerous if you don't have it, because um that's the concept of concept of business growth. So now, what is now cash flow? Cash flow is simply the movement of money in and out of a business over a period of time. It is not about profit, it's about timing. About timing. So a business can be profitable and still run out of cash. For example, now you sell goods worth 1 million in January on credit, but your supplier now need to be paid now. So your rent is due now, your staff needs salary now. You have profit on paper but not on cash. So the good habit here is that you collect payment immediately when possible. You collect your payment immediately when possible. Delay big purchases until after peak sales. So there are some company that just because I need to buy some so goods. These goods need to be reviewed properly. Delay, so just delay some purchase until you have a big sales we can pay for. Keep a rainy day reserve. So we have review your cash position weekly. That is the only way. A weekly review of cash flow will help you to get the fund information that you have. So we have warning sign. Always borrowing to pay salary is very bad. Cannot tell how much profit you made. Personal and business money are missed. No money left after bill paying. So these are the things that you need to look into. Now, what are the strategy for your business growth as a small scale business? What are the strategy? So now, number one, we once a record is in order, you understand your numbers and you have a clear goal. You are already growing. That means that you are ready to grow. So this section now covers a practical strategy for growing SME. So number one, you have to know your customer deeply. Who buy from you? What do they need? A business that knows it, so its customer can serve them better and charge more. So at that point, so the foundation of every business or service is a deep understanding of who your customer is, what do they want, what problem do they have, why do they buy from you? Why do they buy from you? So Mr. Okonkwo is not run a business restaurant. She noticed many of her customers were office workers who waited fast food, avoidable lunch. So at this point now, she introduced a quick lunch box. You can see. So this because one, you have she knows her customers. Make consistently. So many SME owner wait for customer to find them. A successful business go out and find their customers. Marketing, marketing does not need to be expensive. It does so it just doesn't need to be consistent about it. Use WhatsApp, word of mouth, flyers, social media, stay feasibility to either church so because customer they forget fast. So the third one um is build relationship. So loyal customer, new customer. If you have a 10 loyal customer, that means you have yourself 20 customer because when you have the uh, relationship between others. So when business is built on trust and relationships, because a loyal customer who come back every week and bring friend are more valuable than 100 diamond brother. Yeah, that's it. Because remember your customer's name, your preference, respond quickly to complain, and also build relationship with reliable supplier. So these are the major things. So we have price for profit. So your price must cover cost of goods. That is it. So if you want to give someone price, you have to mark it up. So invest your profit. Don't spend all your profit on personal expenses. Invest at least 20 to 30 back to your business for growth. So track and also review your record monthly. What work, what does not. So you need to adjust that ideas. Very important. Very very important. So now this your road to success is very clear. It's clear. It's clear because uh you learn all the key concept about it. So now you have to follow this. You start record, know your number, set goals, manage cash flow, grow strategically, review and improve. So this is where we need to start record. Buy a notebook, open a spreadsheet, record every sales expenses starting from today. So that don't wait for the perfect time. Don't wait for the perfect time. So know your number. So uh, we have explained so far at the end of each week and so add up revenue, cost of goods sold, everything. So that you need to understand your numbers. Fix your cash flow. That is managing cash flow. You have to be tracking that every week, every week. So strategically growth from section something like that. Remember. So we have review monthly. You set a fees, a fees business day, each month. Review record, compare to goals, identify problems, and celebrate others. So a business that keep record, plan strategically will outlast a business that simply hope for the best. So the major key takeaway here is you have to record keep is not just an optional, the backbone. Know your revenue, expenses, and profits. Set smart goals. Know where you are going, not just where you are. So manage cash flow. Profit on papers means nothing if cash run out. So that is it. Market your business consistently using WhatsApp, everything. So review and learn. Adjust monthly. So we can do this. So because every business started small. So um every business started small. I said what separates winners is action, discipline, and record. So you can do this. Start today, one step at a time. Thank you. Uh, thanks for your time. Thanks for your time. So if you have any question, you can relate that with me. Thank you.